I'm with the Georgia Center for Nonprofits, and we had a lot of you. I was just saying, I think our largest was over 1,000 of you sign up about the PPP loans. And we thought it's about time to start talking about documentation requirements, forgiveness. I know all the things that are hot on your agenda. So we reached out to Maudlin & Jenkins, a partner of ours at GCN. They teach classes for us. They step in when we have hot topics to help with some of you that are clients. They have offices all over the state. So we partner with them as much as we can. Jeff and Alicia are here. I think it says Alicia in both names, but Jeff and Alicia are here. They are the partners of Maudlin Jenkins. They are in charge of the nonprofit practice, I think, or specialize in that area. I should have gotten bios. I've known them a long time because they were my personal auditors and made sure I towed the line back when I was the CEO of a nonprofit. So I may sound a little familiar. It's because we go way back. So they're going to step in. If you have questions, use the chat room. We're going to hold for questions at the end for audio. I'll be monitoring the chat room. Remember, everything in chat does get saved. So if you do side conversations, those are all published too in chat room. We're going to keep everybody on mute. You can unmute yourself, but we'll try and hold the background noise. So with that, Jeff and Alicia, would you like to get started?
Yeah, thank you. Thank you, Kathy.
Thank you.
Thank you. It's a pleasure to be here today. I'm Elisa Howe, partner in our Atlanta office and run the nonprofit practice along with Jeff, also running the nonprofit practice, and I'll let Jeff introduce himself as well. But we're both very glad to be here today to give you a little bit of information. We're going to go through the slides. So if you want to advance to the next slide, Kathy. We're just going to give you a little bit of information today. We have on the presenter slide myself and Jeff's contact information. Feel free to reach out to us anytime after this presentation as well, if any questions come up that you didn't think about during the presentation. The next slide, please. Our contact information was on the previous slide. So today we're going to talk a little bit about, and I know there's been a lot of conversation previously about the different types of loan programs. And as Kathy mentioned, we're really going to focus today on the Payroll Protection Program, loan forgiveness, and the information around that. Just recently, the application came out for the Loan Forgiveness Program, and we're going to have that information for you, but did just want to briefly mention the other programs. The EIDL program, we've got some slides in here about that in case you are interested in it, but currently it's only available for agribusiness. The Payroll Protection Program, as I mentioned, we're going to spend a lot of time on that program today. And then the third area was the Main Street Lending Program. The Main Street Lending Program, again, we have some slides in here for your information about the program, but it's currently not available to nonprofits. There is a recognized need that nonprofits should have access to other types of lending as well. The Main Street Lending is an actual program in which you would pay back that actual loan. So we're reading a lot about the need for a particular program in that area, but currently it's not available for nonprofits. Next slide. And we just had, like I mentioned, a little bit of information about the EIDL program. And here, as I mentioned, it's just really for your reading, or if you're involved in other organizations with the agribusiness, the information is up here of what this is available for. But it's only available for those agribusinesses now. Next slide.
And Elisa, I think what I'll do, I'll comment on this in general.
Okay.
So this program, is not really anything new. It's a disaster loan program, and it's been used, for a long period of time with various disasters, and in particular for this virus. It had special provisions that were made available through this program. And this program is different than the PPP program in that it's a program directly through SBA, where the PPP program, you're going through your bank and they're the ones administering the program. And it became so popular with the advent of what we've been experiencing the last couple of months that like the PPP program, they ran out of funds and then actually had to add money to the program with this last round of stimulus that occurred. And even after they added money to the program after the last round of stimulus, they still had to further limit the availability of this, like Elisa mentioned, to agribusiness. Now, one question that we get a lot, and I actually had a client call me this morning about this, the one thing that was unique about this program was initially there was a forgiveness feature of this for up to $10,000. You would apply through the SBA website. There's a streamlined application, and very quickly you qualified for a $10,000 advance that was automatically forgiven. So you didn't have to give back the $10,000. That made this program so popular in the beginning that they changed the program to where they were only going to advance up to $1,000 per employee. And so if you got in early on this, before they limited the funds to agribusiness or before they ran out of money the first time, and you're still waiting on your advance, it's possible if this is your situation that advance would be limited to $1,000 per employee and not the automatic $10,000 that most people were applying for in the beginning. And we had a lot of clients that were just applying for $10,000 because they really did not want a loan. You know, the remainder of this you would have to pay back, and they really weren't wanting a loan. They were just wanting the advance funds. So just a heads up on that there was a change early on, and honestly, they're still so far behind with this. We have numerous clients that still have not received their advance funds, whether it be a couple $1,000s or the $10,000. And you can go online and just read about that, and they're making every attempt to get caught up on this. So the next screen is probably one of the main reasons why a number of you are here to listen to this today. And Elisa, myself, and a lot of us around the firm have been spending a significant amount of time on this program. And we have dealt with a number of issues related to this that are kind of real world issues with our clients. And just when I'm getting confident, and I think I've heard every situation, I'll hear some other situation related to this, and it's something that's not addressed. And we try to figure out how it's going to be handled. And this is a very timely moment for you all to be on this webcast because over the weekend, we got some guidance that answered a tremendous number of questions regarding this program. And hopefully now we can answer most of your questions that might relate to this. And if we can't, we'll just tell you that. And a lot of, I think, interpretation might occur with your banker, because they're going to be the ones processing your loan forgiveness application. And that's the change that happened this weekend. We finally got some very specific information from SBA on a loan forgiveness application that has forms that you have to complete and then instructions regarding how they're going to be evaluating loan forgiveness. And one screen that you won't see in this presentation has to do with all the publicity that this program received when there were a number of companies, mostly public companies, but a few others that weren't necessarily public, applied for these funds and had other sources of financing. And it got in the press about, how really they probably should not have applied for this money because there's limited money that's available to the general public under this program. And you might have heard about the LA Lakers and Harvard and some public restaurants that applied for these funds and then have since paid them back. So there's a lot of press that happened about that. And once all of that began, long story short, they now have concluded that if you have received $2 million or less under this program, you will complete the loan forgiveness application and in general would not be subject to an automatic audit process through the SBA. And I'm sure there's caveats to that, but in general, if you've received under $2 million, they're going to leave you alone and you're going to complete your forgiveness application and then show them the documentation on how you spent these funds. Now, if you receive $2 million or more under this program, you're still going to complete the loan forgiveness application like everybody else. But what they are commenting on is that you're going to be subject to an audit. And in particular, they're going to be evaluating your need to borrow these funds under this program. And at the moment, I was just looking before the session started, I was trying to see how much money is left. And a couple of days ago, there's still $120 billion left under this program. And the first time that we had the stimulus, it was about $350 billion. That money went in 10 days. And what has happened the second time around, and you can see on this screen that April 24th, there was another $250 billion that was allocated to this program. Second time around, the applications have not been as large because a lot of the big money went in the first round and the money has not been going as fast. But I would still express to you all, if you feel like you're eligible for this, that you have some urgency, because it wouldn't surprise me that maybe even by the end of this week, you know, we hear that, okay, the remaining funds under this program have been exhausted. And there's a lot of discussion now about another round of stimulus. And as you know, the House passed, you know, a bill regarding this, which probably will not get through the Senate. But at some point in time, most people are thinking in about a month or two from now, there is going to be something that is agreed upon in regard to additional PPP funding. So once again, if you have not applied for this, you know, we're just encouraging you to go out and do that. And then this screen talks about, okay, how can I find a lender? And that's one thing that's improved significantly with this program now. And you'll notice the second bullet, it talks about PayPal. PayPal has a site now where you can go through their site and apply. QuickBooks has the same thing. And in general, my advice would be to go through your current business lender, your current bank. If you want to get a higher degree of responsiveness and just be able to talk to somebody, it can kind of go into oblivion when you apply through some of these other sites, because they're dealing with so much volume and it's harder to actually talk to somebody. And honestly, the volume has slowed down to a point now where we have lenders contacting us saying, look, if you've got a good client, you want us to kind of take care of them, they're at a point now where they can process the application fairly quickly. You know, where a month ago, you couldn't talk to anybody and there was so much volume related to this program that nobody had any idea what the status of their application was. So a lot of different ways to apply for this money. And on this next screen, we're getting into some of the specifics regarding the program. You can see here that in particular, what most people are interested in now that have received this money is how can it be forgiven? So we don't want to bore you by getting too much into the weeds, even though I think through the chat, we're probably going to get some detailed questions on this. But what you have to remember in regard to this program is these three things that we're pointing out on these slides. The first one is they have set aside where 25% of the loan proceeds that you received have to go to things other than payroll. So, or I'm sorry, there can't be more than 25% of your loan that goes to things other than payroll. And those items consist of rent obligations, utility payments, and utilities includes electric, gas, water, transportation, telephone, internet access. One question that is unanswered at this point is, what is transportation? Most people think that's fuel, and that's what we're advising people at the moment. And then in addition to these items, what is included is interest. And one thing that's been clarified this weekend is interest is on mortgage obligations, and it's also on personal property debt. So if you borrowed money for a business automobile and you're paying interest on that, that is included now as your part of your forgiveness. So up to 25% of your loan proceeds can be forgiven for those items, and the remainder of it would be payroll. So one bit of confusion that was clarified this weekend, and this was a big deal, there were a lot of concerns that, let's say that you spent 70% of your money on payroll, and then you spent 25% on these other items, and that left another 5%, that you would have to pay back because you didn't spend it on either. Because you didn't get up to the 75%, was that entire amount not going to be forgiven then? And I was on an SBA call last week, and that question came up over and over again. What if I don't spend 75% of my money on payroll? Does that mean none of it's forgiven? And honestly, at that point in time, the person that was on the SBA call kept on saying, well, if you don't get to 75%, none of that money that you spend on payroll will be forgiven. So luckily that's been clarified, and that's not true. So if you spend even 60% or 40% or 50% on payroll, yes, that amount will be forgiven. You don't have to hit the 75%, but you'll have to pay back the difference between, the whatever it is that you have spent and what the 75% is. So what we're telling our clients to do, and you can look at the calculation on this form, we're saying identify what your rent payments are going to be, identify what your utility payments are going to be, identify what your covered interest is going to be on mortgage obligations and personal property, add that up, and whatever the difference is between those amounts and what you borrowed is what you really need to spend on payroll. And that's assuming those other items don't equal 25%. I have yet to see a nonprofit where their interest, their utilities, and their rent equals 25% of the amount that they borrowed. So just pay attention to that. And another key thing is, from the date that you receive the money, on that very day, you have 8 weeks to spend it. Now, there was a lot of question in regard to payroll, in regard to, well, is it when I actually pay the payroll, or is it when I incurred the payroll? And that was another item that has been clarified in this loan forgiveness application that came out this weekend, to where you can now select an alternate date in regard to payroll. So let's say that you received your PPP money today, but your next payroll doesn't actually get paid until a week from now. That 8-week period of time can actually start a week from now, when your first payroll is triggered, and then that's the measurement date in regard to payroll. And another clarification has to do with, at the end of this 8-week period of time, let's say that you've got a payroll that you incurred, in this 8-week period of time, but you're not going to pay it until maybe the 9th week, because that's your payroll cycle. They're going to allow that in your application now because of the fact that you've incurred that payroll. And right at the end, even though you have paid it later, as long as you pay it in your next pay cycle, then they're going to allow that as part of the forgiveness. And it's the same thing for your rent. If you've incurred rent and you get to the end of your 8-week period of time and you actually haven't made one of your rent payments, but you've incurred that because time has passed, they're now allowing for you to include that in your forgiven figure, as long as you pay it, during your normal cycle. And the same thing with utilities. There's a lot of concern about, well, yeah, I'm incurring all my gas, water, electric cost in this 8-week period of time, but I won't get the bill until after. Are they going to allow us to include that? And yes, they will, as long as it's in your normal cycle for your payables. So it was very helpful that we've received that information. And I know we're throwing a lot at you here. If you can go to the next screen, Kathy. You're going to see a little bit more on this next screen about forgiveness. And and when you're thinking about this, think about it that there's three things that you're having to watch out for to make sure that you're maximizing your forgiveness. The first thing is the 75-25 calculation. You know, if you want to have at least 75% of what you borrowed going towards payroll. That's the first thing. The second thing is if you had a reduction in wages for your employees that exceeds 25%, they're going to limit the amount of forgiveness under this loan, and you'll have to pay some of it back. The third thing is if you've had a reduction in full-time equivalents, and Kathy, if you could go to the next screen here. And you'll see, you know, on this next screen, the calculation, and it's right up here at the top. But in regard to full-time equivalents, you have to pick one of two periods, 2/15/19 through 6/30/19, and then 1/1/20 through 2/29/20. You have to calculate your full-time equivalents in those two time frames, and whichever number is less is going to be your base period that you go with. And then for the 8-week period of time that is applicable for your particular loan, you want to compare your FTEs then to the FTEs that's in one of these base periods. And like I said, you want to take the one that's the lesser number because it's a lesser standard that you have to meet, and then verify that you've maintained that same FTE number, full-time equivalents. And another clarification, there's a lot of debate before about, well, how do I calculate full-time equivalents? And some people were thinking it was going to be a 30-hour week, and other people were thinking it was going to be 40 hours. So in these loan forgiveness instructions that we've just received, it's clear now that it's a 40-hour week. So basically, you have, if you have somebody who works full-time, that works at least 40 hours a week, that's considered one FTE. If you have somebody who works half-time, and let's say they work 20 hours a week, that's a half of an FTE. And you have to compare, like I said, your FTEs for the 8-week period of time to these two base periods, and then just make sure that you've exceeded or at least met that same FTE for the base period that you've selected. So that it's a little bit trickier. We're spending more time talking to people about FTEs, but just remember, you've got to have a handle on that. You've got to have a handle on this 75% at least being spent on payroll. And then if you've had a reduction in wages that exceeds more than 25%, you've got to have a handle on that. We haven't really had many clients that have actually had a reduction in wages, so that has not been a factor. We have had a number of clients that feel like they might have had a reduction in full-time equivalents, and we've had to help them more with that. And then on the 75-25 calculation for payroll, I'd say most of our clients are spending at least 75% on payroll. And remember, you can spend more. It's just if you spend less, you are going to owe some money back.
Hey, Jeff,
Yes.
a couple questions. One of them that fit in with this, when does the 8-week clock start? Does it start with your first payroll after receiving the loan? Or does it start with your money?
Okay, so in general, the 8-week clock starts on the date that you receive the money. But in regard to payroll, they now are allowing you to start the clock at a different time. They're allowing you to start the clock when your next payroll actually occurs. So let's say that, like I mentioned before, that you receive your PPP money today, but your next payroll, you won't actually pay out until a week from now. They will let the clock start ticking in regard to payroll a week from now when you make your next payroll. And then it would be 8 weeks from that point of time on. And that's something brand new that came out in the instructions this weekend.
And then a different question, what if I hire new employees? How does that factor in this? They weren't part of my application, but I have new FTEs.
Yeah, that's actually fine, and it will help your FTEs, and it will actually help also you get to that 75% number or exceed that 75% number of how much money you're spending on payroll. And it can only help you, it cannot hurt you. And remember, the whole goal of this program is to get money into your hands that you can then spend on payroll. And that's why they call it the Payroll Protection Program. And then be forgiven for it, where you don't have to pay it back. And then, one key thing about this is, let's say that some of this money is not forgiven. it becomes a 2-year loan at a 1% interest rate. So it's still a great deal. It becomes a loan if you don't meet all of these forgiveness clauses.
So another question, what if I think I incorrectly figured out my FTEs? Can I go in and correct it after the fact?
Yeah, that's so this FTE calculation is something you're really going to do when you apply for forgiveness. And so really there wasn't a previous period of time that you would have needed to figure this out. And this is solely having to do with forgiveness. And another thing that I have not mentioned yet, and this is pointed out in the slide here, there's a little, I hate to use these terms, but it's just what I'm thinking of now. There's a little bit of a get out of jail provision in this where, let's say that you do the FTE calculation and you come up short. You've had less full-time equivalents in the 8-week period of time than you had in one of these base periods. They are saying, well, as long as by June 30th, you've corrected that situation. So on that day, you've got at least the same number of FTEs as your base period, then you've met the task. And it's the same thing in regard to the 25% calculation if you've had a cut in pay. If you've restored those wages by June 30th on that date, then you've passed that test. So there's a unusual provision there where they've given you this particular day where you can cure either one of those problems if that's something that you can do if you don't meet those tests.
And then last question, what, I'm not sure I can use all the money. Could I pay my existing employees a higher salary? Could I pay them more wages?
And that's a good question. And yes, you can. And one thing that you've got to be aware of in regard to the wages, there's a cutoff of $100,000 a year annualized, and you have to break that down to an 8-week period of time. And I think they actually give you the number in the forgiveness application, but it's something like $15,385. I think I could be off a little bit on, but I know it's 15,000 and some odd dollars. That is the most that you can pay somebody in this 8-week period of time. And because remember, once again, the objective here is to get this money into people's hands so that they can spend that in the economy and take care of themselves. So there's some people that if they're going to be a little bit short, they might look at paying some things in advance that they wouldn't normally pay as early. And they're definitely clear in this forgiveness application that they're looking at how much money you have paid out on a cash basis, and then they're allowing you at the end, if you've incurred the cost, to include that also as long as it's in your normal pay cycle.
Okay, that's what I've got for questions so far. Thanks.
Okay.
Do you want me to go?
And Elisa mentioned this before, but we've got screens in here about the Main Street Lending Program, but at the moment, even though the Federal Reserve, who runs this program, is trying to change this to where nonprofits can utilize these funds, at the moment, that's not the case. So we're really not going to spend any time on this. And this is a loan program, and there's no forgiveness aspects to it. And it's generally for larger companies, so we didn't really see where many of our clients were interested in this, except for a few of the larger chains.
Yeah. And before we move on to the employee and employer relief provisions, Jeff, did you want to call up the forgiveness application, or I think Kathy has that.
I have it if you want. So
Yeah,
I got two questions. Can I use PP funds for 1099 employees?
You cannot, and that, and one thing I'll point out, just so everybody knows, everything that you're hearing about this program, including everything Elisa and myself are talking about right now, and anything you might hear on the news, and just literally anything you hear about it, it's all published on the treasury.gov website. So keep that in mind, and they have a very helpful document that is a question and answer document. It's a Q&A document, and they update it periodically. And the last update was May 13th of 2020. And that's really how we answer these more specific questions, like the one about contractors. And unfortunately, in the Q&A document, there's a question about that, and they're very specific that they're not allowing contractors to be part of the wages. And one thing to point out, the logic of it is that the contractors can actually apply for this PPP money themselves, so they didn't want a doubling up where the contractors were getting the money and then the business was getting the money also, and that was their reasoning behind it. So,
got a couple more questions. So the $2 million mark for revenue, is that this year, 2020, or last year, 2019?
so the $2 million has to do with the amount of money that you borrowed. So if you've borrowed, and actually, Kathy, if you could go to on the application, it's the third page of the application, and it starts off, it says PPP loan forgiveness calculation form. Yeah. If you look at it, kind of a little bit down towards the middle, it says if borrower received PPP loans in excess of $2 million, check here. So they're really just trying to get a handle on who borrowed $2 million, more than $2 million under this program, and you're more likely than not going to be subject to a different level of review than if you borrowed under that amount. It's a fairly automatic forgiveness process based on what we just talked about when you're under $2 million. And when you're over $2 million, there's a significant certification that you have to make when you borrow this money, in that you had an economic need for this money in order to maintain your operations, and that you had economic uncertainty. And if they determine, through a review process that you had alternative sources of liquidity, there's some question about how they're going to look at a line of credit availability. They might consider that to be liquidity. If they see that you've got significant reserves in the bank, if they see that really there wasn't any economic uncertainty and your business has just been trucking along as usual and is unaffected, all of those things would be a negative in regard to them determining that you really were eligible for this money, and they might require you to pay it back. Now, the good news is if they review your loan and determine that, well, we're really thinking you had liquidity and did not have economic uncertainty and really should have taken this money, they are just going to require it to be paid back, and they're saying that they're not going to try to pursue any sort of federal penalties or anything like that. So there was a lot of concern before that was making people nervous, almost too much on the other side of things, where there were people paying back money that maybe they shouldn't have been paying back because they did have economic uncertainty, but they still weren't sure how the SBA was going to interpret that. And now they're just saying, look, we're not going to hold it against you. We're just going to make you pay it back.
So a couple more. Can you prepay 401k employer contributions?
So the way it's worded at the moment, it does appear to be cash basis in regard to what's considered to be payroll, and that's actually part of the payroll computation in the employer portion of pension contributions. But one thing to be careful about, your banker is going to be interpreting this guidance, and you could have one banker that interprets this differently than another and says, well, that's really not appropriate, we're not going to allow it. And you might have another one that says, well, I'm good with that, we are going to allow it. So you have to be careful about things like that. But the way it's worded at the moment, they're saying that payroll is what you have actually paid, which this would be part of payroll as far as how they're defining it. And then at the end, like I mentioned, if you've incurred payroll and then paid it at a later date, they're allowing that also. So one thing, Kathy, so on this screen that you've got up here, I just wanted to show this to everybody because this is a good summary of what's forgiven. And it's got line 1, the payroll cost. And remember, you've got to meet those 3 tests in order to be able to include the payroll costs. It's got the mortgage interest payments, it's got the lease payments, and the utility payments. And then it goes through some math that kind of figures out if you've spent at least 75% on payroll, and it will limit how much you're able to have forgiven if you haven't done that.
other pieces you want to show on this?
No, I think, well, you could kind of, it's a very useful document because there's a lot of instructions. There's another certification on the next page. So be careful about these certifications. Like if you haven't taken out a PPP loan yet and you're getting ready to file an application to take out a PPP loan, there's a certification once again that says that this was necessary and you have economic uncertainty and you need this money to operate your business. And we're recommending that boards have a resolution in regard to that particular certification so that, you know, the board is exercising their governance authority, you know, over that particular certification. And then, but if you look at this here again, we've got various certifications that you've used the money appropriately, you know, that you haven't gone outside these thresholds. And here, actually, you can see this fourth bullet, it's got the 15,385 max per individual. And other certifications that you've just done what you're supposed to do under this program. Because there's some concern that there have been so many loans under this program that it's going to be difficult to monitor the compliance with the law. And that's why you see these certifications. So you just want to take these seriously and make sure that you comply with the different provisions of this program. And then if you page down a little bit further, you can just see very detailed instructions. So it's very likely that any question you might have in this session, if you read this form, you'll probably be able to answer it because there's a lot of detail in here about forgiveness.
There was a question about, are they using gross or net payroll?
They're using gross.
Okay.
And then, you know, another thing, you know, just to mention here, if you're having trouble finding this, all you have to do is Google small SBA PPP, and I'm sorry, even easier than that, Google treasury.gov and then PPP, and you'll find all of this very quickly. I think it's the very first link if you do that. And remember, this includes the employer payments on health insurance also. So for payroll, you've got your gross payroll limited to the 15,385, you know, per person for the 8-week period of time. You've got employer health insurance premiums, and then you have employer pension benefits. All of those combined, if you want to maximize the forgiveness, has to be at least 75% of the amount that you borrowed.
And the other thing just to note, I doubt that anybody's going to wait this long to apply for the forgiveness, but there is an expiration date that we noticed on the form of October 31st, 2020.
There's another. Go ahead, Kathy.
I was going to say, I have a complicated question. So if I had a specialized employee that worked an average of 10 hours a week in January, but we don't need their services anymore, can I bring another employee, eliminate the position, but then bring somebody else and give them the 10 hours to someone else that would be useful going forward? So the FTE would be the same, but the head count down by 1.
Okay, so they're the ones that eliminated the position. It wasn't the, there's a rule that's in the Q&A that if you had somebody who left and they have chosen not to come back, then that will not count against you as long as you have documentation that they have chosen not to come back. And they're asking just to have that like in the form of a letter is considered to be good documentation. Now, if you eliminated, you know, a position, then, you know, that can hurt you in regard to your FTEs unless you've added somebody else, and then that will increase your FTEs. So the FTEs are not employee specific. It's just an FTE overall calculation. It's not attached to any particular employee, but the 25% reduction in wages, that is tied to individual employees. If you have a situation where you've had to cut wages by more than 25%.
So a couple people want to know about applying for forgiveness. Should they wait to hear from the bank? How long should they wait? Is there a particular date? What do
No,
you think about?
I think for most people, they're going to go through the 8-week period of time. Now, the 8-week period of time might end up being, let's say, 10 weeks. Let's say you've got a payroll, you get the money today, but your next payroll is not for 2 weeks from now. Then your payroll 8 weeks starts 2 weeks from now. So let's just say that worst case scenario, it takes 10 weeks to meet the requirements under this program, as far as spending the money. Then most people are going to apply right then. And then there's actually a law that the bank has to process your application within 60 days. So you'll know pretty quickly that your application has been approved, within that time frame. And it's pretty, if you're under the $2 million, it's fairly cut and dry, by the math. You pretty much have spent it on payroll or you haven't, and you've spent it on these other things like your utilities and interest payments. If it's $2 million or more, they're going to be looking pretty hard at the economic uncertainty certification, and it might not be as cut and dry. And I've read that they have literally, they don't have 60 days to make a determination in regard to that, the audit period could extend even into a period of years. So you might have a little bit more uncertainty if you have 2 million or more.
What if I had to pay a lot of overtime during that 8-week period? Or
Yeah, that actually helps once again, because you've got more wages that get you to your 75% of your total loan amount in wages. So that helps, and that's kind of, once again, what they're looking for. They're really wanting this money to get into the hands of employees, and it can
does
be
the overtime, can I count it as one more FTE? How
no.
does it figure the overtime?
No, well, an FTE calculation is based on a 40-hour week. So if somebody, works, like I said, 40 hours the whole time, that's one FTE. If somebody works 20 hours for the 8-week period of time every week, that's a half an FTE. So that's how the math works, and you have to calculate it just based on the amount of time that people work.
So if they work 60 hours, it's not a 1.5.
No,
FTE.
that's a one-time FTE. And then when you're calculating your base period, because remember, you're comparing the 8 weeks to your base period, you do the same thing, so you're comparing apples to apples.
What about hero bonuses during the 8-week period? What if I have staff that have been really working? Does that count?
That we're not. I was reading a little bit about this bonus. They're more worried about owners receiving bonuses, because that could be a signal of, just kind of playing around with this a little bit. But I think that as long as it's an employee and you can justify the bonus, and it's, there's economic reason for the bonus, as long as it doesn't exceed this $15,385 per individual, you should be good.
And then people are asking about payroll taxes. The FICA, what's included?
So
does the employer share of FICA include?
Okay, there was some early confusion about that the SBA once again clarified on the Q&A. So if you look at the Q&A, you'll see a question on that. But gross wages already includes the employee portion of FICA and Medicare. So
right.
As long as you're picking the gross wage number, it includes that. Now the employer portion of FICA and Medicare, that is not part of this calculation. You can't be reimbursed for that portion.
Okay, I'm going to stop and get you back, because I just looked at the time, and get the screen share back so you can talk about the tax relief.
Yes. All right, thank you, Kathy.
Yeah.
Next, we'll just briefly go through this and then roll on into just have a last bit related to filing guidance and things specific to nonprofits. So, of course, there's a summary for some of the compensation benefits and payroll relief that's out there, retention and leave payroll credits, deferral distributions and such. So if you want to move on to the next slide, we can talk a little bit about this. On the next slide, we've just have some information about the payroll tax deferral. The thing to note is the payroll deferral program, not available if you have the SBA loan forgiveness, but I know, Jeff, you were mentioning earlier that there's been some clients where up to the point that you receive the SBA loan, they've been able to take advantage of that. I didn't know if you wanted to share anything related to that.
Right. So, this program allows you to defer the payroll taxes. So once again, the FICA taxes for the employer portion, a payroll tax, up, till the first. You'd have to split it in two, whatever you're deferring, and the first amount is due December 31st, 2021, and then second half is due December 31st, 2022. So pretty significant deferral. And we had a client that figured this out themselves, that you were actually eligible for this deferral. So any payroll taxes, employer payroll taxes that you incur up until you get your PPP loan, you could apply to this program and defer it for these 2 periods. So, but once you receive the money, under the PPP program, then you're not eligible for any further payroll tax deferral. And I can't say that I've been a big fan of this, because you do have to pay it back. There's no forgiveness here. And you're really, unless you're having significant cash flow issues, you're really just kind of putting off an obligation that you might regret, once you get into 2021 and 2022. But we've had a few clients that have taken advantage of this just because they really had to, because of cash flow needs.
Okay, next slide, please. And there's an employer retention credit. The employer retention credit, really, there's eligibility related to suspended, full or partial, from the result of government shutdown and such. And then one thing to note, governmental employers are not eligible for the credit. There's a lot of information on this slide, but over on the left, just talking about basically the credit against Social Security taxes and such. And we have a little bit more information related to the paid leave portion of this. It's on the next slide. The paid leave provision, these are some of the different areas where private employers with, of course, 500 or fewer employees, the count number of employees on the date of leave, just, a little bit of information about this as well, but just basically having this paid leave provisions. And then the next slide, it just talks about the triggers for this. So we'll just kind of briefly walk you through this as in the interest of everybody's time.
Lisa, I might comment just in general on the
Okay.
employer retention credit. In order to qualify for that, you have to have at least a 50% reduction in quarterly receipts measured year after year, or your operations would have had to have been suspended entirely as a result of a government order. So it could be difficult to qualify for that, but we know there's some people out there that can qualify for it. And then basically you get a credit of up to 50% of wages that you pay, maxing out at $10,000. So it's pretty significant provisions there. On the paid leave provisions, we always just tell people that, if you have somebody who has to be home because they have the virus, or a family member that they're taking care of that has the virus, there's credits that you can receive directly off your payroll taxes to help pay for that. And then there's family leave provisions where, once again, you can receive a credit directly off your payroll taxes, and that's how they're passing the money through. And practically, what we have seen since they have come out with the $600 a week federal unemployment provision, and you add that $600 onto the $300 that you were going to get before through the state of Georgia, so basically $900 a week. Most people are furloughing employees when certain events happen that might qualify for these paid leave provisions, because that's more money than they would have received through the paid leave provisions. So it's just something to keep in mind. if there's a furlough that's necessary as a result of of COVID, those unemployment provisions are very significant right now, and they're set to expire at the end of July. And depending on what happens with the economy, they could be extended.
Yeah. Yeah. Okay. And then next slide. There's some additional CARES Act compensation and benefit provisions related to the student loan assistance. Employers may contribute up to $5,250 tax-free towards student loans of employees. Plan distributions, required minimum distributions for defined contribution plans and IRAs suspended for 2020. Plan withdrawals and repayments. So for certain taxpayers personally impacted with COVID-19, plan withdrawals up to $100,000 permitted without that early withdrawal penalty. The plan loan limit, planned loan limits usually for 180 days from enacted is increased to the $100,000. And then funding, required funding for qualified plans extended through December 31, 2020. And then on the next slide, there's some other things we just wanted to talk about specific with nonprofits, and hopefully a lot of you have heard this as well. Tax return filing deadlines. Of course, probably most of you on this call are filing the Form 990. Which if you were up against a deadline, whether you were 12/31 with your first deadline being due May 15th, it's been extended to July 15th, or if you were at a final due date because of a June 30th year end, and then your final was been due May 15th, that's also extended to July 15th now. Most of the states, early on, there was conflicting information, but most of the states have chose to follow those new IRS deadlines as well.
And if you all follow this, there's talk now to change this to September. So we'll wait, but they're talking about individual and business extensions until September, but nothing's been determined on that yet.
And then there's, we're just recommending and some information out there about, like, if you overpaid, of course, whether it might be parking tax or something like that that was repealed, and for estimated taxes and such, to go ahead and file as quickly as you can the Form 4466, so that way you can actually get that to carry over. And then the next slide. Related to individuals, there's been a change for the new 2020 tax year. Basically, there's an above the line charitable contribution of up to $300 to individuals who don't otherwise itemize. If you think about, if you have to qualify for itemizing your deductions, you wouldn't be able to take that as a charitable contribution, but now there's an above the line ability to be able to donate and take that $300 deduction. So we're hoping, of course, that will help nonprofits maybe open it up to some others that have not normally given, or where they're kind of looking for a tax deduction in that area. And then for other itemizers, permits charitable contribution deduction up to 100% of adjusted gross income. I believe it was 60% before. So that's a big change for those large donors, are able to give up to 100% of their AGI. So that's another good area for nonprofits. Corporations, they're allowed to permits a deduction of 25% of taxable income, and that was up from 10% previously. And then contributions made in cash in 2020 to public charity. Basically, these are in areas of that cash for the contributions made to supporting orgs and donor advised funds in this area. And then on the next slide, we just have some quick information. We want to keep you on time about affiliation rules. We've had a lot of this questions surrounding like a supporting organization or some other type of entity that rolls up with affiliation. and how and what entity actually, can apply for the loans, how that works, where your employees actually rest. It really comes down to the key, the power to control, items of consideration, of course, ownership, joint ventures, all these different areas. But we can answer, kind of help you through. We've helped a lot of clients through specific questions related to this factor when it comes to others trying to get funding.
So we didn't really, we were talking mostly about forgiveness on this call, but if you're applying for the loan, one of the primary provisions is that you have less than 500 employees, and you have to consider affiliations. Like if you've got common management with related entities, you have to look at the number of employees together to see if you're under that 500 number. And then if you don't meet the 500 rule, don't just think that that's the end of it. You can plug in the type of organization you are, and there's a certain revenue threshold too that you might meet, where you might be over 500 employees, but you meet the revenue threshold and you still qualify for the PPP loan. But pay attention to affiliations, because it could affect, if you qualify or not. And there's a lot of information, once again, on the treasury.gov website about affiliations.
Yeah, and if you need the information about the standard, I mean, like a good example, generally like in the higher education world, nonprofit world, even though they may have over 500 employees, they can go up to 30 million in revenue. So there's a lot of exceptions out there based on the different industry codes.
A couple questions. So if I got 3,000 from the EIDL, the disaster money, 3 employees, does this impact my forgiveness on the PPP?
Yes, it does. It will reduce your forgiveness by $3,000.
Okay, and can I pay sick leave, COVID-19 related sick leave?
Yes.
In my payroll?
Yeah, and that's specifically included. That's been another, I think that was in the Q&A also, and yes, you can.
And then I give a health and wellness reimbursement each month. It comes out like a bonus payroll with taxes, deductions. Does that count?
Yeah, anything that's in box 1, which it sounds like that's what that is, that does count, as long as it's taxable compensation. Well, I'm
Okay.
sorry, I don't want to confuse everybody. It's not just box 1, because if they've got withholdings for things like insurance or pension, you have to consider that, but it does include everything that's gross wages. So it sounds like it does.
But this question is about the bank determining forgiveness, as if it's their own opinion, or are they simply ensuring that you've spent the funds correctly based on the government guidelines?
Yeah, that's what they're doing. They're going to be taking all these guidelines that we've been talking about and interpreting those. And I'll give you an example of some interpretation, like transportation. We think that transportation means fuel. We don't really know. So you could have, like I said, one bank that interprets that differently than another. There are some unanswered questions that we might not ever get an answer to. So there's a little bit of interpretation. Hopefully with this guidance, you won't see a lot of variance, because there's a lot of detail in this loan forgiveness application.
Okay. Let me keep going up. I think I've got the questions. Anybody else? Questions? So this, I'm not sure I understand the question. Can any business choose to use their FTE at the time of application period as January 1 through February 29th, or is it just new ones?
No, any business can do that.
Okay. I think that's it for questions. So Alicia, Jeff, thank you so much. We recorded this. We will be posting it. Can we post the application and instructions you sent us on our website?
Yeah, it's all public documents.
Great. Okay. Thank you very much.
Yeah. And thank you for everyone today.
Yeah, thank you.
Thank you. Much appreciated. Everyone, please take care.
All right.
Good day.
Thank you very much.
Right,
Thank
goodbye.
you.
Thank you.